We're talking real money.
Because, well, it's really, really important. And we want to help. We want to help you manage your money better. We want to help you spend it better. We want to help you invest it better. We want to help you retire better. And
you get louder and softer by the moment.
Yeah, I'm trying to figure out what's going on with my tie line unit. The volume keeps changing.
It does. It's been
very
up
strange.
and down, very strange. I always am here trying to turn it down.
Technology doesn't love me today. Doesn't love me.
Be an unusual day for that to occur, but okay.
Yeah, because generally I'm surrounded by technology, and it knows I appreciate it.
It does.
Apparently,
give it a big hug
the message
for me
today.
Yeah.
Hi, everybody. I'm Don McDonald with a technology issue. Over there is Tom Cock, who is technologically challenged. And
I believe there's a term you used with me when you talk about me and technology.
Yeah, and for those of you who aren't aware, there's a little history behind the term I use for Tom. I call him a Luddite.
I wasn't actually okay. I thought it was worse than that, but I thought.
Oh, what else did I call you?
I'm not even going to say it.
No, what else? What have I called you?
Not going to bring it up. Letting it go.
How many of you know what a Luddite was?
Do you know what a lot of hands there? No.
Yeah. Do you know?
Educationally, I'm trying to remember why.
No, it's from the 17th century.
Well, you're one of the few people that was alive then who would know.
In England, they were mechanizing the creation of the weaving of fabric. They had mechanized
Who else
looms.
knows this? Okay, go ahead.
They did.
Yes.
And the Luddites were people who were opposed to
They're
mechanizing.
breaking them up or something, right?
They went and they broke. I
haven't broken a thing in my life.
You break technology all the time.
It
doesn't work anymore. Why doesn't my iPhone work?
That's true. I do complain about it. But
you do, yeah. But, he hasn't gone to Cupertino and tried to burn the place down or anything, so thank goodness. But anyway, that's what the Luddites were against mechanization, industrialization.
I'm not against that. I don't know it. I'm not good at it.
Don't understand.
I have a smart car now. Does that help?
Only if you know how to work it.
Which I probably there's a lot of buttons in there. I never touch them because I'm not quite sure what that'll mean. Yeah, that's bad.
Yeah, I like my smart car. I actually take my Honda and put it on the highway and hit the whatever the adjusting cruise is called. I can't remember what they call it. And the self-steering.
There is no way I'm doing that while I'm on this earth. That's not going to happen.
Totally do it. Totally love it. In traffic?
No.
Oh, it's lovely because
I'd have to close my eyes and start crying or something.
So great.
No.
855-935-TALK to talk about, buying a car. That's a money thing, or investing or saving for retirement, which really is the big topic today. The big topic today is your retirement plan, your retirement investments. You're building that future that you want to enjoy. And one of the ways we do that is through a retirement plan at work. And if you work for a school district or a medical facility of some kind, nonprofits, you probably or may have available to you a thing called a 403B plan, which is very much like a 401k, except for the fact that the insurance industry really latched on to 403Bs.
And I also forgot that 403Bs do not have the fiduciary standard for the folks running them that you are required with a 401k. I forgot. Every time I read this, I'm like, oh, that's right. They don't
shocking,
have that protection.
Isn't it? Because the insurance industry, because the insurance industry doesn't want it. The insurance industry lobbies against a fiduciary rule applying to them, and they have been doing it for decades, and they're relentless.
It is shocking. I mean, this article is by a woman named Liz Weston, who we've known for many, many years.
Oh, Liz Weston's awesome.
Yeah, she writes for NerdWallet, which I believe is now where Herb Weisbaum writes as well. And Herb will be speaking at Retire Me. But again, this is fascinating. And the other thing that comes out of, and I don't want to, and you could spend more time on this because you've been on the front lines of this. You've seen actual cases where employers have changed their plan after being pressured, after being lobbied, that they had horrible 403B plans, and somebody went in and said, just give us Vanguard. We'll just use our own funds there.
And the biggest was Albuquerque, New Mexico School District.
That's it. Okay.
Had just insurance options available, and a listener to my old show got his fellow employees together, fellow teachers, and they lobbied the school district and got Vanguard brought in. And you, as a 403B participant, need to be more aware than probably anyone. And we'll talk more about that a little later on in the program. 855-935-TALK, 855-935-8255.
Tom and Don are talking real money.
In medicine, a second opinion might save your life. With investing, a second opinion might save your future. The trick is getting one without a high-pressure sales pitch. Well, I'm Don McDonald, and if you've been listening to Talking Real Money, you know that our goal is to help everyone create a brighter future by investing and managing money better. That's why, in addition to helping everyone on our show and podcast, we are also committed to making our 100% fiduciary advisors at Appella available to help everyone make the best financial decisions based on science. So if you're being pitched a financial product or a system, make sure you get a second opinion with no cost, no obligation, and no annoying sales pitch by going to TalkingRealMoney.com or call 800-386-3004. That's 800-386-3004 or TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Throughout the hour, we're going to talk a little bit about some of the problems with 403B plans at work, and so stick around for that. And we want to talk with you. We want you to tell us what's important to you. The questions you have are up for discussion at 855-935-TALK, 855-935-8255. And Wanda, thanks for waiting. Welcome to Talking Real Money.
Is it the Wanda, Waiting Wanda? Is that what you're saying? Okay.
Yeah. Hi, Wanda.
I've been called worse.
Sorry to hear that.
I just want to ask a couple. I can segue from the 403B because I did have a 403B, but now we have Fidelity 401Ks. But that's totally unrelated to my question. What I wanted to ask was my aunt, who has lived with me for the last 5 years, passed away a month ago, and I'm now in charge of dispersing all those funds, and it's quite a challenge because there's not a whole lot of money anywhere, but there's a bunch of little pieces in many places. And also I've heard that there's like a final income tax thing you have to do. So I wonder if you have any suggestions for people near end of life, making their life easier, and or the people who are taking care of their money later, how to do that better.
So you're the personal representative for your aunt?
Yes.
Okay. Yeah, I mean, is there an easier way? Well, depends on what the person, who's leaving the money. Yeah, sure. I mean, first of all, a few things. If you have qualified accounts, the aforementioned 403B, IRAs, that kind of thing, those could all have beneficiaries. That money goes directly from there to the beneficiary. So there's nothing for the personal representative to do. Then with other accounts.
But now I've been told, I'm sorry, with the IRAs, I've been told that there is no beneficiary. They can't have one. So that has to go through a whole different process.
No, that's not true.
No, those
I
go
have
directly.
a beneficiary on my IRA.
Yeah, those are going to go directly from your aunt to whoever. So you're saying she didn't have any beneficiaries on her individual retirement accounts?
No, I was told that she couldn't, that they don't have them on these accounts.
Well, I'm unfamiliar then what kind of account it would be, because if you have a retirement account of any kind, whether it's an employer plan, whether it's sort of held on your own as an IRA or Roth, all of those have the opportunity to have beneficiaries.
Yeah,
I don't know.
I know that
lost.
That's an absolute fact. On any IRA account, you can designate an IRA beneficiary, and that skips probate. Whoever told you that, I believe there's either some misinformation or misunderstanding, because as a matter of fact, let me just look here just to make sure I'm right.
I've never heard of that, and I've been doing this a long time. But, and again, Wanda, as the personal representative, this may be a reason for you to at least go see and have an hourly consultation with an attorney of some kind who specializes in this area, because I've never heard of anyone not being able to pass along an IRA, as I say, or any retirement account directly from the decedent to the beneficiary. I've just never heard of that.
Yeah, and I'm on Schwab, and I'm on Schwab's side because that's where I have an account. I'm looking. Yes, I have a beneficiary. It says here, quote from Schwab: "You may designate your own IRA beneficiary."
Better be me, by the way.
Okay,
It's not you. Sorry.
One of them was a bank, and then another one was something else. And that's what I've been told when I call.
You can name a spouse or a non-spouse, but the problem is the non-spouse beneficiary has different distribution rules than a spousal beneficiary. But and again, let me look at Fidelity.
Right, but I was
Fidelity takes beneficiaries on their IRAs.
Couldn't have them.
Yeah.
Yeah,
well,
I
I'm
gave
confused.
you bad information there. Yeah, or the account is not an IRA or like, because there may be a certain type of account that couldn't have one. Again, that would be unusual, because what I was getting to is, even for people trying to help others, even with your regular investment accounts, you can have what's called a TOD, transfer on death. So the money still goes directly from that person to the person you want to leave it to. So that again avoids sort of this difficulty of dividing things, working your way through it. And I do recommend that because it just simplifies things.
Now, I did look online, and I found that some banks and credit unions do not internally allow payable on death beneficiaries.
What does that mean? Don't internally. So they
don't. They won't let you do it on their account. If the IRA is with the bank, they're not going to
move
let
it
you
to somewhere else first.
So it may have been that bank did not allow naming a beneficiary, but generally speaking, I believe, unless the law changed this week, that it's still okay.
Okay. And then also somebody said something about a final income tax thing that you have to do.
Well, yes, you do need to file income tax on the estate. That's
You've got to do a final return, for the person, for the decedent.
How big was your aunt's estate?
Okay. She didn't have that much. She hasn't paid taxes for years because she never made more than her allowable per year.
You know, I mean, here's the thing. So if it's a small amount, I mean,
they're not going to care.
They're not going to care. I hate telling people to go ahead and break the law, but I wouldn't worry about that.
We're not telling them to break the law. We're just saying,
ignore the law.
I mean, no, it's just that what are they going to do if they find you? They're going to say, the estate needs to write us a check.
Yeah, and that's not going to happen. So I wouldn't worry about that part.
You can't put an estate in jail. Hello.
Okay.
Good to know. Yeah.
You know, if she hasn't filed returns in years, and she's got a small estate, there's just all the tax liability is going to be on the beneficiaries or the heirs. They're the ones.
But remember, there in the great state of Washington, you have to have more than $2 million, and federally, you have to have more than like $11 million to even be.
No, I'm talking about anything that might exist on an IRA or on a beneficiary for an IRA.
If she's leaving an IRA to somebody, then yes, they're going to have to take the money out eventually and pay tax on it over the next 10 years.
But if she's had too little income to even file a return.
I wouldn't worry about it.
Then you're not going to need to file a return because she had too little income before she died, probably.
Oh, okay. Because I was thinking I should file one anyway, just because they said I should.
I mean, it's not going to hurt you to file it. It's not going to hurt to file it. It's not going to cost you anything. It should be really easy to file.
Okay.
So you just file it. You file it between now and April, and you're done.
You may even have more time than that. I don't know.
I know, but it doesn't sound very complicated.
No. We wish you well.
There's not a lot to do.
Yeah. Sorry,
it's kind of a pain, but I think you got some bad advice or confused advice, because generally speaking, it's a great idea to name beneficiaries on your IRA because it avoids probate. It's a great idea to have PODs or TODs on accounts if it's a simple estate. If it's me leaving it to my wife, it's better to have a TOD or POD, depending on the state you're in.
Wait. You're leaving it to her and not to me? I put up with way more than she has.
You know, the funny thing
We're going to have to talk about this.
Here's the thing. All of my accounts are joint with her.
Oh, this is going to be hard.
Her accounts are not joint with me.
Wait, is this the old, everything that I make is ours, everything you make is yours? That's one of those.
Right.
Yeah, okay.
It is. It's one of those.
Lovely.
855-935-TALK. But she's cute. So
She is. She's pleasant. She's fun. So there you go. It's all worth it.
Adorable. Yeah. It's fine. Anyway. Hey, we'd love to talk with you. Give us a call. 855-935-8255, 855-935-TALK. Don McDonald here, Tom Cock there, and we're talking real money. Really.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
Well, it's good to be here with you, and we hope that we can help you live a better life by helping you deal with money. I'm Don McDonald. Tom Cox over there playing drums on his mic.
Wham, wham, wham. Whatever works.
I did it with my glasses earlier. I always do that. I turn and I got my reading glasses on. Oh, I'm sorry. My wisdom glasses.
You're cheaters. Yeah.
My wisdom glasses. And I tell you, I am the cheapest so-and-so with these because I lose them or break them all the time. So I go for the 3 for $15 special at Amazon.
I got the same ones, I think. Yeah.
Yeah. They're dirt cheap. They work. I'm good. 855-935-8255 is a really important phone number because it allows you to call us and ask questions during our show every Saturday and then listen to it as a podcast in the next week. And now we are, we're going out east. We're going to South Carolina. That's a long way from you, Tom.
It is.
Ken,
wish I was
welcome
there.
to Talking Real Money.
Hello. Thank you both for all y'all have done to help me through the years.
Our pleasure. Thank you.
I had a question. I know a few years back after retirement, y'all had a special going when it was still Vestory about a retirement plan evaluation. I know you offer the hour of free time, but I was thinking it might behoove me at age 50 to get a little bit better evaluation of what I've got going on.
Heck, we'll give you the whole better evaluation now. We decided to just do that. And
Okay.
for free.
You can still go to talkingrealmoney.com,
Go to
click on Meet an Advisor, and we're going to help
and what
you.
you'll get,
Doesn't matter.
it won't be a big printed document like we used to do with my retirement roadmap, but you will get printed information. You will get a really good idea of where you are and what you might need to do to get to where you want to be, which is essentially what we did before.
And that's basically what everybody wants to know. Kind of what do I got to do to get to retirement to make it successful? So
we just really we believe that we need to make it as accessible as possible to anybody, period. No sales pitch. You know that. None.
All right. Well, thank you very much.
So we look forward to talking with you, Ken. Take care.
yeah, and hope you'll be back for Retire Meet 22424.
Oh yeah. We'll be doing the online 24 Retire Meet coming up. So we hope we can help you there. Thank you so much. 855-935-TALK is our phone number. 855-935-8255. We got a call for an off-the-air question, Tom.
Oh, okay.
Okay. Rick wants to know our opinion of Delaware statutory trusts.
I don't like these things.
What they are, for those of you not...
Didn't we just do a show about not letting the tax dog wag the tail or whatever? The tax tail wag the dog? Okay,
yeah.
got it.
I knew what you meant.
Thank you.
A Delaware statutory trust is a way of selling a piece of investment property and moving it into...
Real estate
into this DST wrapper and avoiding taxation until you sell the DST, which is invested in different real estate properties. It's kind of like buying a fund of real estate properties, but there are some huge differences.
You know, and I'm not sure I know all the differences.
I do.
I mean, okay, please. I mean, because I don't know them all.
Upfront commissions
cost,
as high as 10%.
Yeah.
Ongoing fees, 3%, 4%, 5% per year. There go your tax benefits, because remember, you're not paying tax on 100% of the money you take out of an investment property. You're paying tax on the gain.
Long-term
and it's a
gain,
capital gain, and it's a long-term capital gain, which is taxed at a lower rate. So let's say your rate is 15%. Well, you could pay the 15% and be done and have money you can invest anywhere, or you could put it in a DST in properties you're not going to know how good they are. You could pay somebody 10% to get into it, and then pay them 3 or 4% a year. After 2 years, you're worse off than if you just paid the capital gain.
And how is the liquidity on those?
Terrible.
That's part I don't really know.
Because they're small portfolios, so you don't have liquidity. They are private portfolios, basically, and they are relatively illiquid.
Yeah, this is somewhat similar to me to the exchanges, right? 1031 exchange, like just kicking the can down the road for me. Either bite the bullet, pay the tax, get on with your life, or say, I'm going to just keep pushing this rock this way and hope that eventually my tax rates lower. I don't know what you're hoping for, I guess, at the end of the day.
Yeah, and when it comes to capital gains taxes, it's not going to be that big a difference waiting. Even if you are in a lower bracket, they're already lower rates. So I'm just not a big fan of all those added potential costs.
Tom and Don are talking real money. Reality radio for a really great future. We're talking real money.
And before we move on, just another thing on another point on DSTs, Delaware Statutory Trust. Again, these are a way to create a 1031 exchange into a different portfolio of properties rather than identifying your own property when you buy or you sell a property and you buy another to avoid the capital gain. Another thing about them, I talked about the fees. Now, the honest DST brokers will tell you the fees. They will tell you there is a commission. They will tell you there is an annual fee. However, because these things are lightly regulated, they don't always tell the truth. You will hear a lot of times from a DST seller, oh, there are no fees. Well, then how are you paid? Oh, the company pays us. Well, then what has happened is the company has marked up the value of the properties to pay a fee to make them look more valuable in the portfolio, and they're going to be taking something out of the internal revenue being generated somehow. But there is no such thing as a no-cost investment. They don't exist.
Yeah, that's not true, by the way. Fidelity's got some no-cost investments. Zero funds.
There has to be some cost. They're making money on trading. They're making money on
it, but you can buy the fund for nothing, and there's no operating expense. So
right. But I'm just saying that there is that somebody's making a little money somewhere on something because giving stuff away is not a very good business plan.
Not long term.
Not long term.
I can remember some of those .coms that were doing that 25 years ago. Didn't work out well either.
855-935-TALK. That's our phone number. And Dawn, you're up next. Welcome to Talking Real Money.
Well, thank you, guys. This is really a simple question, and I have to apologize going in because I don't have all my material with me. But I'm in my 80s. My husband is as well, and we, of course, have to satisfy the RMD from our IRAs annually. Mm-hmm. This year, it's going to be a sizable amount between the two of them. And my question is, because our IRAs hold, I know, 3 Vanguard funds, and they're pretty steady in that. Is it better for me to take the funds now when, for example, one of the funds is trading quite high and I can sell less shares to satisfy the RMD, and put that money into my savings account with a BECU, which is a credit union, and get some interest that way? Or is it better for me to leave the money in there until I absolutely need it because I'm reinvesting the dividends for those funds?
And so you do not need the money from these RMDs to live on. That's what I'm taking from this, correct?
Well, we probably will as property taxes and things come up later on in the year. But I have to take it out anyway, so I can, I just don't know about the timing of it.
Well, here's the timing.
That's the problem. We're talking about market timing.
Yeah. Here's the timing.
The ultimate question is you want to know the right time to sell it.
Right. I want to know if I'm going to benefit by leaving it there as long as I can.
Well,
with the reinvestment.
maybe.
Yeah, okay, maybe. But
it
let me
depends.
finish that. So for our clients, just so you know, if you don't need the money, we wait because the market does have a natural, upward motion to it. But is that a guarantee?
Right.
Absolutely not, because you may get to December and say, well, that was a bad decision because I should have sold it in January when markets were higher. So we do not know that. So here's to fix that. Here's an idea. Why not do some now? And then, because you already said you might need some for property taxes anyway, then do some in like June. And then if you really wanted to be kind of a dollar cost averager out, do the remaining whatever you had in December. You don't have to do it all in one time. No rule says that. So that way you sort of get a mix of prices. That would be my take, because
I've done that in the past,
but
and I'm not sure what the interest rate is on the savings account.
And very low at BECU, and because I'm a BECU, I would not use BECU for my savings account. No, I would have a high yield savings account because they're just not paying much in interest. I love them. I think they're a great organization in some ways. That's not one of the ways. So I would open another one if I was going to be holding cash for any period of time.
Okay. And where would I find such a beast?
A high yield savings account?
Yeah.
Yeah, hang on. I'll find you one right now. Let's see. They're paying on their. Oh, wait. What? 6.17?
Not at BECU, they're not.
Hold on. Don't go away. I want to check this out because I just punched it in and it says 6.17. Oh, on the first $500.
Tom and Don are talking real money.
Do me a favor. Grab your latest investment statements if you know where they are. How many do you have? A lot? How many different investments are in each statement? A bunch? Do you own individual stocks, bonds, sector funds, and stuff you don't understand? Yeah, I thought so. I'm Don McDonald, and I'm pretty sure you have a case of hodgepodgeitis. But don't worry, it's not terminal and can be cured. But it takes three things: a bit of time, some fiduciary guidance, and a plan. There's a problem, though. Most financial advisors can't or won't provide any of those. That's where we come in. Tom and I will provide you the help you need to overcome hodgepodgeitis in a free, no-obligation meeting with an Appella advisor at TalkingRealMoney.com. So, scan or take a picture of all those pages you gathered, then go to TalkingRealMoney.com, click on Meet an Advisor, and set up a free appointment online or by phone when it's convenient for you. Let us sort through the mess and help you get started on a better, simpler future plan. Just go to TalkingRealMoney.com or call 800-386-3004.
Your guides to a really great financial future. Tom and Don are talking real money.
We'd love to talk with you at 855-935-TALK, 855-935-8255. So funny. I went to the BECU page before the break to look at their savings rates. Because Don wanted a savings rate. So I went and looked, and the first thing you see is 6.17% APY.
Which is weird because I'm a client and I don't think I've ever been paid that kind of money there. So
well, you have to read the fine print. Very sneaky, BECU. The rate on the first $500 in savings is 6%.
Oh. Then
the rate on the rest of it, everything over and above that, is 0.5%.
Oh, wow.
That is, that, for a credit union, that's
pretty sneaky. Although, remember, Bank of America and Chase are still paying 0.1.
Yeah, so forget it. Okay, so you want to know, did you find her a nice bank?
Yeah, I did.
Okay.
I did. If you go to bankrate.com and click on their high yield savings, right now there's a bank called Brio. It's an online-only bank. They only do savings accounts and CDs. That's all they do. You can transfer it in from a checking account and then transfer it back within a few days. It's not instant, but it's within a few days.
Yeah. Mm-hmm.
They're paying 5.35%.
How do you spell it again?
BRIO.
BRIO, Don.
Okay. Never heard of it. It sounds like
it doesn't matter. It's FDIC insured.
Yeah, it doesn't matter.
It's literally in today's world.
It could be some guy sitting in his basement with a computer. It doesn't matter. They go out of business. FDIC comes in and covers you.
Yeah. Don't put more than $250 there.
Right.
So
good.
250,000.
Oh, pardon me. Yeah. And then go to BECU and give them 500, I guess. And
yeah. If you get BECU 500, you get a nice rate. But really.
All right,
really.
guys. Thank you
Thanks,
so much.
Dawn.
I appreciate the help. All right.
Thank you.
Bye-bye.
Dawn, thank you for calling. I have a work wife named Dawn and then a home wife named Dawn. It's kind of a weird thing in my life.
Spelled differently.
Thank you for your call. It's spelled differently, but
thank goodness.
Anyway,
that would be kind of
there you
weird.
go. Thank you for your call, Don. Oh, by the way, before we get off the RMD thing,
I have another caller. But
I know,
ahead.
real quick, it's been funny to read in the media how people are complaining that their RMDs are going to be so big in 2024 because the market went up. Yeah.
Wait, again. You made money and you're complaining?
There's been a lot of complaints like my RMD is going to be huge, and because RMDs are determined by your balance of 12/31/23.
Okay,
so they're complaining. Sorry.
Here's your choice. Your account value could go up a lot more than your RMD, or you have a lower RMD. Which one would you choose?
Wow, I got to think that through. Yeah, I'll give that a couple of shows and I'll get back to you.
We're so illogical. All right, we've got another call. Came in 855-935-TALK. Still have time for yours too, by the way. And Mark, welcome to the show.
You want more money or less money, Mark? Which is it going to be?
More money or less money?
Yeah, which one? Which one do you sign up for?
More money, absolutely.
Okay, all right, good. Well, there's one vote right there.
No
good job.
kind of guy. I'm
okay,
just gonna
Don
say no
says
to
no.
everything.
So okay, yeah.
What's up, Mark?
Hey, I just wanted to run something by you on buying a home in retirement. I'm in Connecticut, and I'm in a small condo. I'm single. I'm 66. I've got kids, but they're all launched. And I want to go to Florida. I'm retiring in March, and I've got a lot of money, but I've got $1.6 million in retirement. 1.4 is pre-tax, and I got 200 in a Roth. And this small condo I'm in, it's about $180,000, and I owe $70 on it. So I got about $100,000 in equity. I've been looking at homes in Florida. Man, they're like $500,000 for anything decent down there.
Wait, you want to move from Connecticut to Florida? Does anybody else do that? That seems like a very anomalous thing.
Well, actually, there was a recent study done.
No,
most U-Haul trucks leaving from any state are leaving from Florida.
I'm just kidding you, Mark. So what's your question?
Prices are high.
Well, I'm going. Yeah, I mean, the prices are high down there. But my thought is I'm going to go down there in March, just vacation for 4 weeks with some friends. But I'm thinking maybe later this year or next year, going down there, maybe renting for a year. But to fund this thing, I don't have a pension, so I'm going to basically live off the $1.4 million pre-tax and just keep it under the IRMA limit, of like $100,000 a year.
Yep.
Up until I'm 70, and then take Social Security, which is a huge number at 70. It's like $4,600 a month.
Love it.
But to fund this house, what I was thinking is I've got 100. Also have 130 in a brokerage account. To fund the 500,000, I'd take 100,000 from the condo sale. I'd take about 100,000 from brokerage, and then I would drain that Roth account, the 200,000. I know a lot of times they say, the Roth account's the last account you take in retirement, but it's tax-free money, and it would, I could fund the house with it. Or the other option would be, could I even get a mortgage if I'm retired?
Yeah, that's tougher. But yeah, okay. First of all, I want to correct your math a little bit on the sale of your condominium. Remember, it's not just what the equity is minus what you owe, because there's this thing called sales tax or estate, whatever tax they have in Connecticut, and the cost of the sale. You got to pay somebody to sell it. So it's going to be less than that 100 likely. So that's a number to recalculate.
Now, I have a very important question for you. Have you identified the area in Florida where you might want to live?
Yeah, I have friends that live in St. Petersburg, and it's.
So you're talking about the Tampa area?
Tampa area, but specifically St. Petersburg.
St. Pete.
And I have some friends down there, and.
Why are you so anxious to own a place? What's up with that?
Yeah. That's my question.
I'm not really. I mean, I'm kind of kicking it around. I'm going in March, so maybe I'll get a better feel in March what's available.
I love the rent thing, but get a feel for whether or not you like it.
I love the rent thing, maybe even past that.
Yeah, who knows? I mean, we've done a lot of stories recently about how it's better financially to rent
right
than
now,
to buy.
I can tell you that you very likely could make more on that money than you're going to pay in rent. Buying homes and they are in the stratosphere right now. And the other thing with buying a home in Florida, particularly that close to the water, is the homeowner's insurance.
Oh, I was going to say it's going to end because the water's rising and you're going to
the insurance coastal is ridiculous.
I think there's no reason to make any decision right now about any of this. I think you go down there, you live a year, decide what my lifestyle wants to look like. Then you could make a decision. And I don't know that I'm a huge fan of taking all your after-tax money and rolling that into a house.
Nope.
Because you're just getting rid of your liquidity then, especially your tax-free liquidity. So.
Yeah, but I have the 1.4 pre-tax, and I have no pension, and I'm going to hit RMDs at 73, so just start getting it out of there.
Well, it depends, though. Your Roth. I'm back to I wouldn't touch a Roth until you've depleted everything else, because that just continues to grow tax free. So I wouldn't mess with that. And I would I'm with Tom. I mean, again, I'm becoming a bigger and bigger fan of renting, particularly in retirement, because these days
I'm all for renting if it works.
Yeah, these days renting is just a bit cheaper than buying on a monthly basis almost everywhere in the country, particularly in the high-cost home areas, which are Florida, California, New York.
And then if it turns out that my prediction about the rising waters then you just give them the keys and go back to Connecticut. It's easy then, too.
Have to watch your house float away. But no, I think renting is a great idea. Then let's look at it from there. Thanks for the call.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
And welcome back to the program. I'm Don. Tom's over there.
We started the show talking about the 403B, the disadvantages that many of these have, the fact that employers providing 401ks are held to a fiduciary standard. Fiduciary rules do not apply to public school 403B plans, which is an outrage. But if you're in one, what the heck do you do? Right? We talked a little bit about the fact that sometimes you're going to have to become a lobbyist and go to the people that run the plan and say, look, you got your insurance buddies. That's fine. You can keep playing golf, keep offering those things, but at least give us Vanguard or some other low-cost alternative. That's one. You could save into an IRA or a Roth IRA on your own, right? And I think some of these plans, Don, offer a target date fund, and you could use that. But here's another idea. I love this. We love this website. We've talked about it before. 403B Wise. You go look at the plan to see if you should be using it or not, because I think they use a color-coded system of some kind, like green, yellow, red, etc. So you can go look at 403B Wise to see how your plan rates and whether or not you should be using it. But don't get taken advantage of. I mean, this is honestly, this is a scam. I mean, it's outrageous that this continued for all the time it has.
Is it a scam? It's disingenuous, and it's not good for you. And by the way, it's 403bwise.org.
Pardon
me. Do not go
to
.com.
I don't know I hope you're not getting something bad there.
.com is not good. It is not good. Don't go there.
Please.
403 is that, that's why when I get a website, I try to get the .org and .com, because somebody can have your name.
Yeah.
But they are so awesome. You just pick your state. And, for example, I'm going to pick my state, Florida, and then Osceola County. And I'm curious to see what our school district ranks a C, because they don't have much good stuff. They have Vanguard and Fidelity, thank goodness, but they have a bunch of bad stuff. So they're a C because they have so much bad stuff, but the smarter employees can invest in index funds through Vanguard and Fidelity.
Pay attention. Another reason to pay attention is that coming up in just a few weeks, we're going to be doing the 10th annual Retire Meet. Don McDonald will be in town right here in beautiful Bellevue to be talking about investing for retirement. I'm going to talk about retirement income. We've got our top planner who's going to be there, Jason, talking about planning. Kevin Peterson about Medicare. Tina Hall about where to live. Paul Merriman showing up again. The irrepressible Paul Merriman to talk about how much is enough. This is just some of the stuff. We've got a great speaker from Dimensional Funds. And right now, Right now, if you sign up today, you get not only early bird ticket pricing, which is lower than what you're going to pay in a few weeks. You also get the handsome and readily usable Talking Real Money mug. And you can use it at the show. We hand it to you as you're walking in the door. If you don't sign up now, you don't get the mug. It's just that simple.
You're going to be drinking coffee from a paper cup.
Oh, it's going to be deplorable.
You better sign up at retiremeat.com.
Easy.
You know, I just looked at the next door county, which is Polk County here in Florida.
Yes. Okay.
And they don't they have like Voya and Waddell and Reed and Equitable and just terrible Ameriprise. Oh,
just drives me crazy on this stuff. Really does.
Anyway, thank you so much for listening to our little program. We are glad you're there. If you want to hear more, remember, we do a podcast almost every day. We don't do them on weekends, but you can check those out on your favorite podcast service. Just look for Talking Real Money, or you can listen to all of them all the time, like 1,200 and some odd are up there at TalkingRealMoney.com.
The opinions and views expressed in this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions.
Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy.
Information presented on the podcast is not personalized investment advice from Appellate Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appellate Wealth, a fee-only registered investment advisor.
Please see Appellate Wealth's ADV Part 2A on our website for information regarding Appellate's fees and services.
Appellate Capital, LLC, DBA Appellate Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appellate does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. I think I need a nap.